Hey guys, Mike here. So obviously disastrous day in the market today after earnings from not only Walmart yesterday, but then Target today. As you can see, I mean, the indexes are they're down way farther than this right now, even as I record this. You can see I'm dropping like a rock. And as you can see, I've never seen, Walmart had its bigger drops in 1987 yesterday after its earnings. Target's getting just nuked right now. The generals are being taken out back and sacrificed at this point in time. You can see they're dropping major right now. And, the good thing is the way I look at this. Some people look at this as bearish, which actually is bearish. But this survey came out yesterday, and it's, the fund manager survey about how much cash they're holding, right? These big funds. And they haven't held this much cash since 9/11, okay? And so it's a long time since you see this much cash. And yes, it's bearish, but remember, it's one of those things where I look at it a little different when I say, when you get this kind of level of cash, guess what that is? That is fuel to a fire. That's what that is. And if you look at those dates on there, and then you go to the chart, March 03, December 08, June 2012, October 2016, April 2020, those are major rallies. And why were the stock market able to rally back? Because these hedge funds had trillions of dollars sitting in cash on the sidelines, right? And, you look at where they're at, a lot of cash. Everybody seems to be wanting to go to commodities and healthcare, REITs, utilities are doing great, energy's killing it. And obviously, what's in the bottom over there? Tech. That's just the way it is, unfortunately. And the one message you should get from that is, if cash is good enough for hedge funds and all those other funds, then cash is good enough for us, right? Cash is king in a market like this. Cash is trash in a bull market, obviously for obvious reasons, right? And so this is what allows, bear market rallies that go up, 10, 20, 30% sometimes to happen, even though it makes no sense why it's moving up. There may be no news. It's because all that cash is just sitting on the sidelines. And I'm talking about around the globe. It's got to be in the trillions, okay? Just sitting there waiting to be deployed, right? And so I look at that more as a good thing than a bad thing, so to speak. I understand some people differ with me on that, and that's fine. But, one other thing I'm going to bring up, and I'll track this for us to make sure, but understand, I'll put a little more of this in the detailed video tonight. I want to talk about the catastrophic day we've had and why. But one thing I'm going to be tracking closely, because if you really want to understand what the consumer, or how healthy the consumer is, which is us, and certain markets are and things like that, you got to be watching for this right here. And that is the delinquency statuses. This just came out yesterday, I believe it was. This tells you how many days somebody's delinquent, all that good stuff. And you can see right there what happened 07 to 2010. Absolutely skyrocketed. Everybody lost their jobs. People can't pay bills. And if you look to the far right where we're at now, you can see, it's basically flattened right now in 2022. It's basically coming down in 2021 because people got plenty of money in the bank currently, so to speak. But now inflation is starting to rear its ugly head even more, and people are feeling it, right? You watched my video yesterday, and I saw a lot of people comments. It's eating people up, and it's going to continue to eat people up. And you'll see that in the video tonight, which I'll talk more about. And, when this starts to go up, and it'll start to go up, if we start to have more layoffs, which I showed you in one of the videos yesterday, and people start losing their jobs and all that good stuff, and we go into a recession, you have a slowdown, all of that stuff, then this is going to start to go up. But right now it is not, but it is something you have to track, because it'll tell us for sure how healthy is the real estate market, right? How healthy are the consumers? Because right now, people don't have to pay student loans. When that actually, if it ever comes back where people have to pay student loans, what's the delinquency rates on those? What's the delinquency rates on the credit cards, which people took out millions of new credit cards this year? It's like 272 million credit cards or some crazy mess. Some big astronomical number like that. And so we're definitely taking out a lot of debt. I am not. But, because in this environment, this is not time to be taking on debt right now with interest rates going up. But, that's how some people survive, and so that's what some people are doing. And then, of course, with, mortgage interest rates through the roof and continue to climb, which they will continue to climb, then we're going to see on this right here, this is going to let us know, and I'll track it for us. You don't have to worry tracking this, to let us know ahead of schedule, like what is happening, what can we see on the horizon. When you start to see those delinquencies go up, then, you're not going to really feel it until months and months later, actually, right, when certain reports come out. But if you can see it coming a mile ahead, it's like anything else, right? It's like watching those headlines and those companies' announcements when they talk about layoffs, right? I think Netflix just did one yesterday or something. So, that's what we want to look out for. Hit the like, subscribe button if you got anything out of this. Just a quick video. I'll hit you up tonight later on, the more detailed video of the carnage we had today and why it might continue on and persist, okay? So have a good one, guys.